Hey, what's up, guys? So this is going to be the weekly recap. I want to go over all of my students' trades. I want to talk about the things I like, the things I don't like, how I would analyze the trades. And so the first stock we're going to start off with is Save. So to go along with this, I'm going to kind of try to go through my thought process on this, okay? So Save. The first thing I do on every single trade is I come in here to Edge to Trade and I check out Save. What are the stats? All right, so the stats were 10 million or 108 million float. Okay, I like that. 32% short float. Don't like that at all. 47% institutional ownership. Huge red flag for me. I'm not interested at all. SSR, that's a more advanced thing. So those of you that are watching this in the free community, you guys should remember, and you guys need to have the discipline to only trade gap and craps. I have my red flag criteria in there, and you guys should know what those are by going through the core studies. If you guys are trading things like this, and you know that I don't recommend you trading those, when you take that loss, that's on you, and that's part of being a trader. You don't have a boss. You don't have somebody standing over you, looking over your shoulder. You have to learn how to be your own boss, and unfortunately, it takes a lot of trial and error. And so, on this stock right now, there's no way in hell I would trade this stock at all. But for the sake of my student that did trade this, the only way that I would trade this is, well, if there was enough value to it, right? So the first setup would be over here at a pop and fell. So 319. Okay, so what's the ideal final target? It's gonna be down here at 280. For me, that's not enough range for me to trade. And so honestly, for me, and this student knows this. That this is a pass. So I literally would not trade this at all. If you did though, the trade that how it would have worked out would have been you're taking the trade right here, risking right above. You would have covered half down here. The other half would have got stopped out, and you would have been out of the trade. All right, done. So you made half size from 319 to just under 3, so you made 20 cents. All right, you made 20 cents on half size. Whatever that means to you, that's the only way to really trade that. I'm not going to go into how to trade the gap and extensions or anything like that, but that's how he should have traded this. ITRX is another one. So the reason I don't like this is because in my lessons I talk about floors and ceilings, right? So this is the floor. It's $1.05. There was a couple of different levels when I was going through the trade, right? So there's one key level here, another here, and another there. Okay, well if it pops up to here, that's 50 cents. But like if you look at the stock, right? This looks like when I look at this, I imagine like playing a video game on like a original Nintendo or something, where it's just like the pixels are horrible, the graphics are horrible. You try to get that out and play with your kid nowadays. They're playing on the PS5. They're not going to be very excited. I'm not looking to trade stuff like this because it's super risky. Now when it starts popping up here, for me, this thing went into a halt. So it went into a halt up right here. It opened right here. Well, there's a daily level right here. Okay, well, how's it respect? On top of that, there's a whole dollar number at 2. So for me, if it opens right here, it just shot up from $1 and it opened halt around 180. Okay, in my head, I'm like, okay, well, where does this stock need to go? Because that's what you need to get into thinking, like, what does this stock have to do for me to even spend my time trading this? It has to come to you. You don't go to the stock. And like really, I know that might sound different, but like that's the mindset you need to have. And so for me, okay, it'd have to stuff out, around $2. For those of you that are trading in my free room, once again, I'm going to repeat, you should not be trading this at all. But for you more advanced guys that are watching this, or people that are seeing this on YouTube, the proper way to trade this would be after it's stuffed out at $2, risking the high. Okay, well, my first target doesn't get hit. Okay, it curls back up. Depending on how your rules are and your style, okay, stop out, break even. All right, it didn't work. Leave it alone. For you more advanced guys, there's a second level up here, and like I said, I'm not going to go into the gap and extension stuff or how I play those, but that's how you should be trading it. So once again, that one would not have worked. ITRX or ITRM. So let's see. Da-da-da. Float 21 million, like that. Low short float, low institutional ownership, no SSR. They need cash. 12 gaps, 8 of them close. So really, this is a good stock, but at the same time, the problem is it's not the stock that's wrong. It's the chart before that. Like, this would be like, I would imagine, like, it's forming its pre-market. And so typically this thing would be doing this kind of move over here in the pre-market. That's what should be happening. Is this gap should have happened way over here, like say 4 a.m. and you see this and you trade it as a gap and crap. Or a pop and fill, or a gap and extension, however it sets up. But for me, this looks like it'd be setting up for, a gap and crap, because it'd be down here. I'd be looking for this thing to trade a gap and crap. But since it didn't have a gap, it didn't have a move, you have to wait for it to form the move. Or how I trade the pre-market is it has to have a daily level. You don't just jump into a trade. It needs to do certain things, or it's not worth your time, because that's how you get cut up. So next one would be BIVI. So BIVI. All right. So 10 million float, like that. Low short float. Anything under 30% is like, obviously the shorter the lower the better. I don't want anything, like, honestly, like anything over like 15%, depending on what the float is. That's also another big factor, is how big is the float, But 2%, that's perfect. Institutional ownership, 12%, perfect. No SSR. It's got 6 gap stats. Closes red 5 times. Okay, I like this stock. Perfect. So that means that as long as this does what I want it to do, it's worth my time. So I put a marker on there. This is the day that it got traded on. So for you guys, once again, that are in the free room, how you guys should have been trading it is, this is the pre-market high. Pre-market low. Alright, you should be trading in this zone. Risking the high. Okay, cool. The closer the better. Like, it as long as it does not break over this, that's great. And for me, the way that the student traded this was absolutely perfect. He waited for this thing to come up. You have to see it reject. Just because it's in the zone does not mean you take a trade. There's no rejection here. This thing just rips straight through. Okay, well, now it's finding a top. A huge green candle opens, pops up a little bit, dies. Okay, cool. Well, the second candle over here, I want it to either push up and have like a lower high green was showing some weakness, or exactly like how it's doing in here. Like the doji, depending on how you're reading that. I'm not really looking for like a doji when like it has a long bottom candle. That for me shows that somebody's buying. There's more buying pressure than selling pressure, in my personal opinion. That's how I read that. Everybody has their own opinion, but when this thing opens, it pushes up and then starts stuffing back down. That would be my entry. All right, cool. So you get in there, get in somewhere in there. Okay, you cover half here, cover another half here. It curls back up, stops you at break even. There you go. That's the trade. How it does all this stuff over here, that's for more advanced traders. And yeah, you can make a great trade on it, whatever. But that's how you should have played this thing out. VRAX, go over here. VRAX. So, and that's another thing. I don't know if this is if it has SSR on the day that we're trading it or whatever, but like that's one thing that I'm always looking at. I'm always looking at SSR. Beginner traders, you need to be cautious with SSR. I'm not against you trading SSR as long as you do it correctly, and I go into that in deeper detail in my lessons. But float under 5 million shares. That for me is a red flag. And how I teach my students is, okay, that means it's not an A setup. Does that mean that you can't trade it? It means like that you should trade it with caution. So like whatever your 1R is and how we factor in 1R in my community, you should take it with like half size. That's how I teach. Everybody has their own preference. That's my recommendation. Float, short float, 5%, institutional ownership 7%. Those are both green lights. It's got 12 gap stats, 9 of them closed red. All right, perfect. This thing it's got enough good green signs for me to take the trade on this. All right, so the day I got traded was over here. Okay, so this thing pops up. This is the pre-market high. This is, not for the, so in the free community, this is not setting up for you guys to be trading a gap and crap. The reason for that is, in a gap and crap, it needs to find a topping and then fell down. And then after the open, it pushes back up and it can't push past the 6178 fib. You take the trade and look for it to fail. That's the easiest way for you to trade. Not only does it teach you discipline, but that's the easiest, safest trade. You start trading this kind of stuff, you have to have the discipline to cut off the trade if it doesn't work. You have to have a good eye of being able to read the tape, read the volume, understanding chart patterns, all that kind of stuff. There's a lot more experience that goes into trading these, which is why I recommend not to trade those for beginners. But like I said, you guys are all grown-ass adults. You guys can do what you guys want. But this thing doesn't work out correctly. And the reason that this is a difficult read, I personally did trade this. How I traded it is I took a short right here. I was risking right there. I ended up covering my position the second this. I think I actually covered before it squeezed up. I'm pretty sure I covered pretty sure I covered right here, and then when this stuffed, I think I took another trade here, and that's how I ended up trading it. And RAX. Yeah, that's exactly how I traded it. I took a short right there, literally like I just said, but then I covered it because I knew this was gonna squeeze. The second it popped, I slammed the bid right there. I got filled, covered half, covered another half, and then I held the final piece and it didn't hit my next targets. This probably, if I go into bigger detail on how I take trades and stuff, but that probably did hit my third target, but I probably wasn't there. I wasn't paying attention. But that's the proper way to take the trade. But like I said, you need decent amount of experience to be able to trade these things, and if you don't have the discipline to cut it off, you can get yourself in a lot of trouble. Yeah, this thing popped up and it stuffed out again, but this thing could have just kept ripping. You never know what the stock is going to do. It's all about scenarios and odds. So you have to trade the stock. Just because most small cap stocks that gap up, this thing's up from $1.76. Most of them go back down to around $1.76. This still hasn't. It's went down. It's had a low of 215, but this has been trading all week. if you get in this mindset of like, oh well, my mentor tells me that all these small caps go down, they do eventually. They like most of them go right back down to where they came from, but you have to hold overnight. You have the stress of holding that kind of stuff, and it for me, it's all about timing. Just because for the most part, these things go down. The timing and the experience to know when to get into the trade, that's the key thing for trading small cap stocks. TVGN is another one. What day did this get traded on? 1 second. 10/23. All right, so on this day. Okay, so this stock, can't remember exactly how I traded this either, but for me, this was not something that I was really interested in because it didn't really gap up until like right before open. And then it took off like a rocket. But like I say all the time, you need to wait for the stock to do what do you want the stock to do? For you to take the trade, what does this thing have to do? You don't just get into the trade. It has to do what you want it to do, or you don't get into the trade. And so for me, I had some students that because this is a gap and extension, I'm not going to really go over my stuff with that, but they were trading in this zone. And for me, like that's not a bad trade. It might have worked out, but for me, I was like, I want a little bit more meat on the trade. And so how I traded it was, like I said, it had to come to me. And so I waited for it to come to me. And it did. And I took the trade, I almost literally the highest point of the entire day. I covered half down here. I missed my other half. I believe that at this time it didn't. I had my orders sitting out and I didn't get filled. So I ended up, because of the way that I trade, which this happens sometimes. I don't know. I could have made more money because I would have had a 20-cent better fill, but that's just, it's the way that I trade. And so I don't know. I'm still really happy with the trade. So, but it's a more experienced trade. This was not up enough. It didn't really gap at all. And so for me, I wasn't interested in trading. Didn't set up for a gap and crap because it didn't have a high and then fell and then push back up. It opened near the high. So for me, all the beginner traders, you should not have been in this at all. This is not a pop and fell, thing for you guys. You guys should only be trading gap and craps. So any of the beginner guys that are in the free room, you guys should not be trading this stuff at all and have the discipline to walk away. You more experienced guys, you guys know how you guys should have been trading that. If you followed the rules correctly, you should have succeeded at this and had a good trade. If not, then you didn't. But the next one is XPON. I believe that they traded this on this day. XPON 1025. Yeah. So for me, this goes back to being kind of a snob with my trading. I really don't like this is up, then shoots all the way back up, then shoots back. Like, this is just I know this sounds, I don't know, like, it's really not that bad because I'm a very picky guy. I'm picky in everything. And so for me, when I look at this chart, is this a bad trade for my trader? No. I mean, if this is worth your time, I mean, this like it failed, all the way down. I just personally wouldn't trade this, but how he did trade it, if this is how his entry was, you go from the high to low, you'd be looking ideally in this zone. This is, still, you start seeing the right chart patterns, this is an ideal area to trade. As long as it doesn't go over this, you're still able to trade. Then you start looking at the volume. Okay, cool. Starts topping out. It starts rejecting. This is why it's so important. You see these green candles going all the way up. First off, this candle, yeah, it stuffs out, but like if you take a trade right here, say $5, you're covered. I mean, yeah, that's got a decent range, but I mean, you could have taken that trade and you would have covered half and you would have got stopped out break even, depending on how it reacted around this zone. But for me, this thing goes up and it starts topping out. Big green candles all the way up. It starts rejecting up in this level. Okay, cool. It's just this thing is trading like it's got low float. Yeah. See, like that's why the chart looks weird. I wouldn't have traded this for nothing. I don't give a shit how much money you can make because there's 500,000 shares that's being traded. Short float's 100%. That's gotta be wrong. Like that means that they're. When I talked to the guy that created Edge to Trade, when you see crazy stuff like that, that means that within the last couple of days there's been an adjustment and it has not been able to calculate correctly. It's got 15 gap stats, closes red. That's great, but like this, like that's you're asking for trouble. That 500,000 shares, this thing, like that's why it's trading like this. It's got way too much range on it, and it's like I didn't even have to look at this toss. I can look at that. I'm like, man, this doesn't look right. But how you trade this? Actually, I'm not even going to go over that because you should never have traded this. You do not ever trade anything like under, realistically like under like 2 million float. Like really under 5 million float, you really shouldn't. Like if it's like higher fours, maybe. Like half size, but that's why I teach my students is like that's not an A+ setup. And at the very beginning, when you guys are first starting to trade, you guys shouldn't be trading everything. That's the biggest problem. People start off with, in the free room, I teach you guys how to trade gap and crap. That's it, just gap and crap. I'm not teaching you any of the other setups. I'm not teaching you how to long. I'm not teaching you how to swing. Like nothing. I'm teaching you guys literally just gap and crap, because if you can't make money on just gap and crap, what makes you think that you're going to make money if you're trading pop and fail, gap and extension, longs, swings, futures, like whatever? If you can't have the discipline to make money on this and on small size, you're not going to make money on bigger size with more plays. It's not going to happen. And that's the difference between my room and most rooms that I'm a part of, is that they don't teach you this kind of stuff, and that's why most of their students fail, because you have to have the discipline to just sit back and not trade. Like this, my student never should have traded this, and I'm sure I let him know that. The next one would be ATNF. Let's see, ATNF. This is the first thing you guys should always be doing anyways. Okay, so once again, 1 million float. This should not be on the thing. And so for me, that's another reason why I want to do this weekly thing, because I want to get to where there's a week where everything should have been traded. That for me, that's my goal as a coach, is to show that my students are super disciplined and they're following the rules. If you're trading something that's got 1 million float or under 1 million float, for me, I failed as a coach this week. My students should know to not trade this. So I'm not even gonna go over that at all. SYTA. Once again, under 5 million float. It's got low short float, no institutional ownership, and it needs a lot of money. Cool. 9 gap stats, it closes 9. That's great. But once again, if they do trade this, SYTA, so on this day. Okay, cool. So 3 million float, right? the reason that this is so important to remember is because, oh, oops. So this thing goes for a pop and fell of pre-market high. Once again, it's not a gap and extension. It's a different setup. So beginners should not have been trading this, and because it's under 5 million float, beginners should not even have been looking at this at all. But I'm sure that this is from one of my more advanced students. But rips through. It's starting to reject up here, but it's got a whole dollar number right here. Okay, cool. Like it rejects, can't break over again. It fails, opens, pushes, starts slamming down. Okay, well that's pre-market high right there. Okay, well for me logically, okay, take a trade right there, risking this high. So you're taking a trade. That's too much range. I wouldn't do that. Like that's too risky of a trade for me, because if you're gonna take a trade at 75, risking almost 20 cents on something with 3 million float, and this thing's trading over 3 million, around 2 million float rotating, it's a risky trade. And for me, there's enough opportunities that you guys don't need to be doing that. So I'm not even going to go over this one either. GNPX. Once again, under 5 million float, low short float, low institutional ownership, 10 gap stats, 6 of them closed green. For me, this is already a red flag. Yeah, it's got negative cash flow, but for me, that's not good gap stats. It's under 5 million float, possibly SSR on this day. Not really sure, but for me, it should have been a pass, really. And I don't know, like, yeah, you could have made money on this, but it's not about making money. That's what I try to tell my students. It's not difficult to make money. People don't believe me on that. It's really not hard to make money trading stocks. The hard part is keeping that money. And how you keep that is stock selection and discipline and proper risk management. And proper risk management goes with the discipline and with stock selection. So once again, I'm not even going to go over that at all. SGMO. 2 million float, 50% institutional ownership. Not trading this either. I'm not even going to go over that actually, because this video is getting pretty long. NXU. Okay, so 11 million float, low short float, low institutional ownership. They're in need of cash. 11 gap stats. Okay, so good stats. NXU. Traded on this day. All right, so it's a really low price stock. The only way that this would have been traded is a gap and extension, because it opened. Where did it open at? Open right here. That's too close to the pre-market high. It wouldn't have been a gap and crap, so you want to trade this. That's the crazy thing about low float. This thing's got, not low float, low price stock. This thing's got 11.5 million shares. That's great, but on the opening bar, this thing's trading half of its float in the first minute. That's another thing that you start getting from experience. Is like, yeah, that's great, man, but these lower price stocks, because they're so cheap, it catches the eyes and people start getting super excited because they can go in with ungodly amounts of size and have really small risk. Because the range of this opening bar is 79 to 70. It's 9 cents. Okay, who gives a shit? You can go in with 10,000 shares and be like, as long as your setup's there, in theory, you can make a lot of money quick. Or you just pass it and look for a better opportunity. IBRX, last stock. IBRX. 159 million float, 32% short float. Not a fan of that. 77% insider float. or insider ownership. I'm not a fan of that either. I know a lot of people are like, oh, dude, nobody gives a shit about insider ownership. But like, one thing I can tell you is when I get to start investing in companies and I am an insider owner, I can tell you right now, I'm absolutely going to mess with the stock and start getting into, I don't know, like that's how these guys make money. They have high insider ownership. That means a lot of that float is locked up, owned by the people that are in the company. Like, why would you not make money like that? That's just my thought process. I could be talking on my ass, and there might be a more experienced trader that can tell me otherwise. But for me, that's just my thought process, and I don't know. I'm a successful trader, and I don't know. I look at that. I'm like, that's a red flag for me personally. I know a lot of really good traders that they don't give two shits about insider ownership, but for me, it's I don't know. Like this is exactly what I mean. This thing goes from you know $4.30 up to like that's exactly what I'd be doing. Like I'd be manipulating the stock to make myself some money, and then this thing gets all the way up here to 750, and then they just tank their shares. Like these guys probably bought, accumulating the shares, and then sell up here. That's the name of the game. That's what institutional ownerships do. Same thing as insider ownerships, in my personal opinion, as long as they have a little bit of experience. But anyways, long story short, I don't like when the final target is hit, even in pre-market. I'm not a huge fan of that. The only way that I will trade that is at the high, because I need to have enough range for this thing to go back down. Okay, this thing when it came up, it wouldn't have worked. It didn't stuff, and it closed up here and then opened even higher. It's not ideal. And then it didn't even get down to the first target. It had a buy up wick and then curled and went even higher. It's like, so really the moral of the story is stock selection. Stock selection is key. These are all my students traded. I might have had multiple people trade the same stock. I review their trades. I give them a loom just like this. Obviously, like a lot shorter. But really, that's my goal with this community is get it to where, in I don't know how long it'll take me, but like hopefully not that long before I start having weeks where hey, all my students they had great stock selection, they followed the plans 100%, and yeah, whether or not you make money, you can trade a perfect stock, trade it exactly how you should, and you still lose money. That's just the name of the game. It's all about the odds, but stock selection puts more probability in your hand. And so really the biggest thing is stock selection. It is absolutely, I'm going to drill that over and over and over and over and over, because at the very beginning of my trades, I remember I used to be part of this room where you'd see all these people who'd be like, oh man, I'm trading this, I'm trading that, I'm trading this. I wouldn't check, edge to trade. I wouldn't look at it, like the stats or any of this stuff. I'd be like, oh, if you can trade it, I can trade it. The difference is I can't. Or I couldn't because I didn't have enough experience. I lost thousands and thousands of dollars before I finally turned my trading around. And really, that's the one thing that I don't want my students to have. And that's why I tell them, hey, dude, nobody is allowed to call out trades in the trading room. Like if they have red flags. If they do, I delete the comment and I shoot them a personal message like, hey, dude, if you're gonna trade that shit, like you can trade that, but don't be putting that in my chat room. And there's a million chat rooms out there that have people that are posting their P&Ls and calling out bullshit stocks, and yeah, there's a million of them. Go join those. Go lose your money in those. What I'm trying to do is I'm trying to teach people how to have the discipline and to follow the rules and how to trade properly. And for me, that means good stock selection and discipline and trading the setups and having clear-cut rules and building the whole community. Like, I understand that every trader is going to have their own style and you can form things, but like in the free community, I only teach gap and crap. So if you are in the free community, which I have a free section in the Discord room, there should be nothing but gap and crap in that section. That's it. And nothing that has any red flags at all. And for me, that's how you teach properly. And that's just my personal opinion. I hope you guys enjoyed this. If you guys have any questions or comments, leave them down in the description. And if you are a trader that has been looking for a room, they don't know how to trade, and they want to actually learn how to properly trade, click the link in the description and join my free trading community. I'll see you guys on the next video.